Hello Canadians, I'm your mentor Bakar Bhatti. In this video, I'm going to explain to you another important financial statement. It is called the balance sheet. Here is a disclaimer. This video is meant for orientation purpose only. If you need mentoring or coaching in accounting, you can always call us at 289-952-3494 or else you can send us an email at pasca2017@gmail.com. Here's the scheme of presentation. We'll look at purpose of balance sheet, then important segments of balance sheet, and finally we'll examine this concept through a work example. Now, what is the purpose of balance sheet? The purpose is to report total assets, total liabilities, and shareholders' equity of a business at the end of an accounting period. Looking from a different perspective, we might say that a balance sheet also highlights the net worth of a business. Now, what is the net worth? It is the difference between the total assets and total liabilities of a business. And as we can assume that if a business is prosperous, its net worth is likely to grow in the years to come. Now, here are important segments of the balance sheet. Balance sheet highlights the current assets. For example, accounts receivables, cash, inventories. It also highlights the non-current assets like plant and machinery, building, fixtures, fittings. Then of course, there is a component relating to current liabilities like accounts payable, bank overdraft, and then there is a component relating to non-current liabilities like long-term debt, for instance. And then we have the most important component, perhaps shareholders equity, that tells you that what is the total investment made by the owners, probably in the form of common shares, including retained earnings. Now here is the worked example of a balance sheet. In this part, we'll look at current assets component. As you can see from these figures, the current assets include cash, accounts receivable, merchandise inventory, and prepaid expenses. And if you add up the value of all these current assets, it comes to 3,221, that is $3,221 million. And in the percentage column, it implies 39.83% of total assets. Now, here is a list of non-current assets. This includes property and equipment, long-term receivables, and long-term investments. And the sum total of current assets as well as non-current assets is $8,087 million. That is the total assets. And if you just look at the percentage column at the top, non-current assets, it is clear that non-current assets are approximately 60.17% of total assets. Now in this component, we look at the current liabilities. For example, we have current liabilities like bank indebtedness, accounts payable, income taxes payable, current portion of long-term debt, that is that portion of debt that is probably payable within one accounting year. And the total current liabilities are 1973, and then we have long-term debt that is 1550, and total liabilities are 3523. That are approximately 43.56% of total liabilities and equity. Now this is the last component, that is shareholders equity. It tells us that the share capital is $621 million, retained earnings are $3,943 million, and total shareholders equity is 4564, that is approximately 56.44% of total liabilities and shareholders equity, that is equal to $8,087 million, and this value exactly matches with the value of total assets of $8,087 million. So it means so long as the figures are concerned, the balance sheet perfectly matches. For mentoring and coaching of accounting, send us an email at pasca2017@gmail.com or call us at 289-952-3494, or else you may like to visit our website at www.pasca.com. I hope you enjoyed this video. Thank you.